All right, so I talked to you a little bit about how taxes work as far as cost of living expenses and things of that nature. So now I'm going to show you mathematically how this works. So just for an example, let's say you make $20,000 a year. Okay, well, what the IRS does is they take your income and they subtract your cost of living. They subtract that $6,300, that standard deduction. All right. And then they subtract your personal exemption of $4,000. It's actually $4,050 this year. Last year was $4,000. And so they subtract these two numbers from your income, and what's left over is the money that you either saved or you spent on luxury items, unless you tell the IRS differently. If some of this $9,000 was spent on travel, if some of it was spent on education, if some of it was spent on accounting fees, you want to deduct that as well from this number. If you do not deduct those expenses, then what you have left over is taxable income. Okay? And again, the reason why it's taxable is because you either saved this money or you spent it on luxury items. Or maybe you just didn't tell the IRS where the money went, which that's your fault, right? All right, so how does that work? This is a tax table from the IRS. This is actually 2016. If you are single, okay, and your taxable income is, wrong button. If your taxable income is $9,700, then you fall in the 15% tax bracket, all right? So what you're going to owe is $927.50 plus 15% of any amount over $92.75. Okay, that's the amount of money that you owe every year for taxes, and you can choose to pay that once a year, twice a year, 3 times a year. You can pay it every week, you can pay it every 2 weeks, you can pay it once a month. It's completely up to you, but you have to pay it. All right. Next example. Let's say you're married. You make $20,000, she makes $20,000. So together you have $40,000 of income. Well, it's calculated the same way. You have $12,600, okay, deducted for cost of living, okay, that's rent or mortgage for the year. And then you have 2 personal exemptions, $4,000 per person, so that's $8,000. When you subtract these two numbers from $40,000, what you have left over is $19,400. And again, unless you deduct your expenses out of this amount, it's all taxable income, and you will be taxed on it. So how does that look? Well, same thing. You're in the 15% tax bracket. Only this time, you're going to pay $1,855 plus 15% over any amount above $18,550. All right. So remember I told you can choose to pay that per month. You can pay it once a year. Completely up to you. This is the percentage method tables for income tax withholding from the IRS for 2016. This table tells you exactly how much you need to withhold from your paycheck every week, every 2 weeks, or how much you need to pay to the IRS every time you get paid. And it's fairly straightforward. If your paycheck is over $43 but less than $220, then you owe 10% of whatever is above $43. Okay, so you take the amount of the check, you subtract $43, and you multiply that times 10%. That's the amount of tax you owe. If your paycheck is more than $222 but less than $767, then as you can see here, you fall into that 15% tax bracket, and you're going to pay $17.90 plus 15% of any amount above $222. All right. And this table can be found on the IRS website. I have the link right here. You can go there, and that will tell you exactly what you need to pay in tax out of each paycheck. They have weekly payroll periods, bi-weekly payroll periods, twice a month, even monthly.